Hello and welcome to another update video about Link. The main question is now if Link is on its way higher towards the next larger upside Fibonacci level that we talked about. I believe it's around $38. Let's double check that and take a look at the Link long-term chart. So we talked about that only recently, and the Link long-term chart, oops, internet a little bit slow, but the Link long-term chart is completely unchanged, as you might recall from previous updates. Would love to see first of all, the white scenario play out, because this is still the primary or preferred interpretation. And in this scenario, the market should move up to $38.40 plus in the larger degree third wave, which would be the third wave of an even larger third wave rally. And that should take us to $69 plus, yeah. So overall, things are looking good because the market is still holding above key support. You might remember from previous videos that the $16.55 level is, for me, the key pivot where we can, or that helps us to distinguish between bullish and bearish momentum. As long as we are above it, I'm going to watch for higher. Okay, and I know a lot of people talk to me about this head and shoulders pattern that we see on the smaller time frame, which is quite bearish, and we will take a look at that if that is still valid and what it means to us. But overall, for me, from an Elliott wave point of view, of course there are bearish alternatives, yeah, because we need to know that's one of the advantages of Elliott wave, that it tells us what would be the plan or the scenario, the roadmap to follow if the white scenario fails, which, I mean, the white count, while it is preferred and while it should take us to $69 medium term, it is not set in stone. It's not guaranteed. Okay, so we need to have a plan for a plan B, essentially, right? We need to have a plan B, and plan B would be the green scenario, during which we could watch for a wider wave 2 correction, so that wave 2 never finished in August, or maybe even something more bearish. But again, that will only come into focus if there's a break below our support at 16.55. Now, if we take a look at the smaller time frame then here for Link, we can see that the 1-2 setup that I shared with you in yesterday's update on Discord, but also I think I mentioned this support area here on YouTube. This support area held, and the market has now even broken above yesterday's swing high. And why is that so important? So first of all, this doesn't, I mean, yeah, people talked about this head and shoulders, and, you know, I don't know, it is one. Yeah, it is one, but there's a reason why I'm not really using these patterns, because first of all, the reality is a bit more complex than a head and shoulders. We have to consider sector-wide tendencies, and across the sector, the corrections were nearly done. At least locally, right, which we see right now, the effect of it. And we were very close to key Fibonacci support. Actually, if I'm adding the 23.6 Fib level to the chart, then you will notice we were already in a support area, okay? So, from an Elliott wave point of view, that 1650, 1660 level below is more important than a head and shoulders neckline, right? Because the problem with head and shoulders is it doesn't give us the context. Yeah, it doesn't give us the context. Elliott wave gives us so much more: the context, the Fib levels, support, additional levels to watch, resistances, the larger degree trend. All of that is not part of head and shoulders, so therefore I don't follow it, right? Someone even said that they start to lose trust in my analysis because I didn't talk about the head and shoulders. Now, when you're watching this video, then again, I try to explain all the time that Elliott wave includes that stuff plus so much more. Yeah, it gives us the entire context, and we don't need a head and shoulders because we've got everything with Elliott wave already, right? But Elliott wave was not clearly bearish here. It was rather showing us that we are in a support area and that we can watch for higher prices as long as above 1660. Now, that is no guarantee that we have to go higher from here, but we can be a bit more precise, because as per yesterday's update, there was an initial micro 5-wave move to the upside between the 1st of Jan and the 2nd of January. And then we had a pullback into this support area, which, to be honest, looks a little bit more like a 5-wave move down, but it's micro counting. So I gave you that support area, which the price reacted to today. And now we see quite an impulsive looking move up. It's not 5 waves up yet. It could develop into the third wave. So for now, I think the focus needs to be on whether the last swing low is holding now. That would be ideal. This is at around $21.60 when the market reacted to the 38.2 retracement. And then the next resistance area is around level is around 24.55. And then the previous swing high from the 24th of December at around $26. So these two levels now need to be overcome to confirm further that we're moving up to the next upside fib level, which I showed you on the daily time frame. That's the update about Link. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.